this video I'm going to tell you my favourite Ftse 100 stocks that pay their dividends in June as part of my 12-part monthly series on getting that monthly dividend income for your portfolios on Freetrade or Trading 212. Disclaimer, I'm not a financial advisor, so if you seek financial advice, please see a licensed professional. Firstly, a frequent stock I recommend on this channel is a software company offering cloud accounting and payroll solutions. This is Sage, or the ticker symbol SGE, and they currently offer a dividend yield of 2.55%, which is quite low. They have a dividend frequency of biannually, and they typically pay in March and June each year, so it's not very balanced, but it will work out. And they currently have a payout ratio of 55.2%, giving them ample room to grow their dividend in the future and also reinvest profits into the business. 55.2% is actually a very similar number to the amount of people watching this video right now that aren't subscribed. So if you're interested in my investing content of my journey with my portfolio in the UK, then click the subscribe button. Thank you. They've managed to pay their dividend consistently over the last 20 years, and in fact, they've managed to grow it year on year. And in the last 10 years, they've managed to grow their dividend by an annual compound growth rate of 8.54%, which is 4 times the target set by the Bank of England for inflation. I would personally look to buy more of this stock if it goes below £6.40. However, its current price isn't too bad either, and it would be a fair price to buy this stock at. The next company operates in the consumer goods sector, providing beauty and healthcare products, foods and refreshments, and home care products. This company is called Unilever, the ticker symbol ULVR. They currently offer a dividend yield of 3.32% and a dividend frequency of quarterly, paying in March, June, September and December. They do have a high dividend payout ratio of 76.4%, which is slightly alarming because they have less room to grow their dividend and also less money to reinvest back in the business. They have consistently paid their dividend in the last 20 years and have managed to grow it each year subsequently. However, in 2009, they did convert their dividend payment currency from pence to euro cents. I don't know if this was a currency conversion error or something that happened, but it did mean that at that time it would be similar to a dividend cut, as you would have received less. However, in the following year after that, it was fully recovered. So I don't count it as a cut personally, but you might do so. And over the last 10 years, they've managed to grow their dividend by an annual compound growth rate of 7.73%. However, this stock is more respected for its capital returns. And in the last 5 years, with dividends reinvested, you would have seen a return of 80.7%. I personally think this stock is at currently a fair price, as it's quite a defensive stock that won't lose too much of its value. However, as a personal target to buy more, I would likely look for around £41 per share. Legal & General / LGen provides various life and health insurance and other various investment services across the globe. LGen currently have a dividend yield of 7.54% and a dividend frequency of biannually. They typically pay in June and September each year. They currently have a payout ratio of 57.6%, which is in a great spot, giving them ample room to grow their dividend as well as reinvest profits into the business. For the last 20 years, LGen have only cut their dividend twice, and this was during the financial recession with subprime mortgages in 2008 and 2009, and this was one after another. So I suspect they cut it in 2008, significant amount, and then slightly cut it again, but then since then they've managed to grow and improve on their dividend each following year. However, in the last 10 years, they have seen an annual compound growth rate of their dividend by 16.42%, which is higher than many other stocks in the Ftse market. Currently, I do see the stock at a fairly decent discount compared to its 52-week highs and lows. However, if I were to buy this stock, I would be quite greedy and look for a price less than £2 per share. And if you're interested in the previous episode of this playlist featuring the dividend payments for May, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a good evening.